Hey guys, Jonathan Rose, owner, Masters in Trading. When we're looking for trade opportunities, we're looking for a catalyst. We're looking for a reason of why a stock should move. So in front of you, TNK. TNK in October went from 10 all the way up to a high of about 26 in the beginning of January. TNK is a tanker. It's a shipping stock. And the reason shipping stocks are moving is because there's a new international maritime rule that's requiring ships to reduce sulfur emissions, and this came into effect January 1st. And according to Barron's, it's going to have a twofold effect on the industry. For one, increased demand for cleaner, more refined fuels. And the second, geopolitical. 1/3 of the oil comes through the Strait of Hormuz. The Strait of Hormuz is central in the conflict of US-Iran, so the risks are elevated. So what this has done is it makes these shipping stocks have gone parabolic, very similar to TNK. Because these companies are forced into reducing their sulfur emissions, all those old ships are being taken out of the water in order to do work on them to reduce their carbon footprint. But what they're finding in some of these old ships is they're scrapping them all together because it's just not cost effective, and they're being forced to build new ships. So companies like TNK, who already are well positioned, are really benefiting. So now we have big news. We have a catalyst for movement. How can we take advantage of this? Well, what I like to do is use relative value. I want to compare the different stocks in the industry because I see here TNK is up well over 100%. But what about the other companies in the industry? So let's overlap them on Thinkorswim. What I've done here is taking the names from the Barron's article. We have TK Tankers. We have Nordic American Tankers, NAT, Euronav, Yearn, Frontline, FRO, STNG, DHT. This is the whole sector going back to 2018. Now you can see they're correlated, right? They break down a little bit. You have the orange and the gray rallying while some of these are getting a little bit more depressed. But what I would look for and how people are trading this is there is going to be upward momentum in tanker stocks. I think it's going to continue throughout 2020. But some of these rally too hard, too fast. It gets over their skis a little bit. So I wouldn't buy the gray, but maybe you consider and do this study on your own. Overlap the entire industry, see what stocks are benefiting, and see which ones pull back more than the others. Maybe it's a good trade right here to jump into STNG. This is symbol STNG. STNG, Scorpio Tankers. There's definitely volatility. There's definitely movement. This thing is in play right now. What about STNG trading 33? If we go out to March, we'll get those earnings as well. What about if we do a vertical call debit spread? So if we do a vertical call debit spread, and let's say we do 35.40 vertical call debit spread. So we're buying the 35s and selling the 40s. If we buy these for $2.50 and sell these for $1, $2.50 minus $1 is $1.50. If we do that 10 times, that's $1,500 of risk. You can never lose more. If the stock gets above 40 in 67 days, this position is going to be worth 40 minus 35, which equals 5. That's $5,000 minus the $1,500 that it costs to put onto the trade. So we can make $3,500 if it trades above 40 within 67 days. And if not, if it trades under 35, we're going to lose $1,500. So pretty good risk reward. Play around with it. Obviously, there's many companies that encompass the shipping industry. I just gave you a small sample. I really wanted to look at the ones that were optionable, but play around with it. It's a good trade. Let me know what you come up with. Leave a comment. Let me know what you think. Again, my name is Jonathan Rose. I'm the owner of Masters in Trading. I always share my favorite 8 to 12 trades every single week with my members. In the video description, I'll leave a link for a free week. Join us, check it out, see if it works for you. Thanks, guys.